Is Dogecoin really going to the moon? Is $1 in sight? And have you missed the hype? Hey guys, Sheldon Evans here, welcome back. Or if you're new here, don't forget to hit the subscribe button and turn on all of the bell notifications. I really do appreciate every single one of you. You've really helped the channel grow like crazy. And if you haven't yet, or you find the information useful, please give it a thumbs up. Right, so on my display, I have the Dogecoin chart open, and I'm sure you know by now, before even clicking this video, that the hype around Dogecoin is crazy. There is so much interest in Dogecoin right now, but you have to understand that a lot of this is just pure hype. There's no fundamental basis to this hype, and there is a huge risk that comes with that. So we're going to cover that. We're going to cover altcoins as well as Bitcoin and Ethereum later in the video too. But first, I want to focus on Dogecoin. So while I do believe that $1 is possible, Dogecoin could continue soaring. It could continue up to $1, even though, remember, it was at 5 cents at the beginning of April and currently sitting at 38 cents, almost 40 cents just a few minutes ago. That is crazy, crazy growth, right? Dogecoin is now at $49 billion, making it the 5th largest cryptocurrency of all, yet all it is a meme, right? There's a lot of hype surrounding this, and we'll cover why Dogecoin is relatively bad from a technical standpoint. But right now, in terms of hype and a return on your investment, I can't reliably or responsibly say that this is a good investment. This is a really bad investment if you were to buy into Dogecoin. But even though we know that Elon Musk has spoken about it and there's a lot of hype around it, and it could potentially become the world's currency in a world where the most unlikely thing or most unusual thing to happen is likely the one that will end up happening, for example, Doge becoming a world currency, I'm not willing to risk that. There are tons of risky investments that you can take in cryptocurrency. In general, it's quite a risky industry to be in. I'm not looking to maximize that risk. I'm looking to maximize my returns. And please be aware that I'm not saying this because I'm salty or I missed out on Dogecoin. I didn't buy any Dogecoin. I don't own any at all. And I've made some very, very good trades this year. And fortunately, I'm in a position that I don't have to rely on risky bets like this and one altcoin that is going to change my life. But there are many people who are in that position that are looking for that 1,000x or that 2,000x gain, and they end up getting ruined or wrecked because they invest in things like Dogecoin, because they hear that many people are making gains in it. For example, if you are in Bitcoin right now or in Dogecoin right now, it's very likely that you're in profit and that you're making money because it is at an all-time high, right? So anyone who has purchased is in profit. And this hype gets accentuated by hype and memes around the internet. But we need to look at the underlying factors of driving this hype and why this is a bad thing to invest in. So in my opinion, of course, this is not financial advice in any way or form. Please understand that everything that I say on this channel is just my opinion. And I could be entirely wrong, but I could also be very right. So I want you guys to just be aware of that. If we take a look at what Calvin Co, a partner at Spartan Group, one of the largest DeFi-focused funds in the world or in Asia, says that the reason this happens periodically is because there are a bunch of quant funds out there that play the convergence trade between Bitcoin and a handful of liquid alts. Whenever their alts look cheap relative to Bitcoin, they pile in. When they look expensive, they rotate back into Bitcoin. No fundamentals involved, so don't try too hard to rationalize the moves. The strategy has proven effective over time, and there are enough managers playing this that it becomes self-fulfilling prophecy and it keeps recurring. So that's all that's happening. It's the money that is flowing around the market and new money that is coming in as well, because we've seen unprecedented demand for cryptocurrency lately, and specifically for these meme coins because there's such easy access to it. So you can buy a Doge on Robinhood, and we saw that with Robinhood going down, and this just accentuates the fact that this is purely hype driven. This is an unprecedented demand, meaning it's an outlier completely different from the norm, and it's unexpected. So when Doge does moon like this isn't healthy. This isn't something that you should expect to continue going up, even though it possibly could. It could go to $1, it could go to $2. Who knows how much money is willing to be pumped into Dogecoin? As you know, a parabola, which it is currently in, can move even faster towards the end. So let's say it moved from 13 cents to 40 cents. It could go from 40 to a dollar in the next short move. It could do that, right? But the downside potential is so high that you're more likely to lose money than make money in this situation. And that's what I don't want you guys to do. I don't want you to be losing money on super risky bets like this, because then you can't invest in other things and end up recouping that. So we can also look that it's a friendly reminder that the fundamentals of most of these fossil coins are identical to what they were months or even years ago. As an altcoin trader, if you entered a trade off of technical analysis, but disregard technical analysis for fundamentals somewhere in that trade, you're more often than not effed. So this is what I'm saying. When Elon Musk tweets Doge barking at the moon, that can send your technical analysis completely out of the window. And whatever you have charted can completely disappear, and the chart can completely change direction, right? And the same goes in the opposite direction. If Elon Musk decides tomorrow to tweet that he doesn't like Dogecoin anymore, or that it's going to the floor, Dogecoin will crash so badly that so many people will get ruined and lose a ton of money. Now, the problem is that there are many of these opinion leaders and people in positions of power and authority that have a lot of say on the market. They are influencers on the market, whether they like it or not. And I understand that I'm in a position like that as well. And I use that position with responsibility. And many people don't. But often it's because they don't realize the power they have over the market, which I'm sure that Elon Musk does know, but he's sort of just playing around with it because he does see it as a meme. He sees it as a joke. But with that being said, Doge doesn't really have any fundamental basis to its growth. It's purely hype-based. It's purely meme-based. Don't throw your life savings into something that is just a meme. And we can look at this. We can look at coin metrics, right? And understand why Dogecoin from a technical side is also a bad cryptocurrency, right? So 100 of the largest Doge addresses hold 68.1% of the supply. This goes against everything that cryptocurrency is. This is centralization at its worst, for that matter, compared to Bitcoin, where only 13.7% of the top 100 largest addresses hold the supply. So while that is not ideal either, that is still pretty good fair distribution compared to Dogecoin. And then on top of that, the top 1% of Doge addresses collectively hold 94.2% of the total supply. So what this means is that people who are pumping money into the market right now, they're simply pumping their money directly into the pockets of the top holders. There's too much concentration of the supply in the top holders' pockets right now. So a lot of the supply, or a lot of the movement of the market, relies on the movements of basically 100 addresses. They can control where the market goes and what happens, and this is a very dangerous position to be in. I mentioned this in a post in my Patreon yesterday, that your life savings or your investments should not hinge on the opinion of one or a few people. If one person, for example Elon Musk, decides tomorrow that he no longer likes Dogecoin, your life savings are in the trash can, and that is a horrible position to be in, and I don't want you to be in that position. It's also important to note that some of the large addresses are exchanges. Many owners of Doge are likely holding their coins on centralized exchanges and brokers, which is, like I said, about Robinhood. But considering there are over 2.7 million addresses holding at least one Doge, the supply is still very, very top heavy. Now, this is a pretty bad position for Doge to be in. We can also look at Lucas from Coinmetrics saying that we need to look at the technical side of Doge as well, and why it might be a risky investment or a risky crypto to look at. So talking about network security, unlike BTC or ETH, or really any other major network, Dogecoin does not have its own miners. It currently relies on Litecoin. So how does this happen, and what does it mean? Back in 2014, Doge was in a tough spot. There weren't enough miners on Doge, and they were at real risk that the network would be attacked. So a network attack, like a 51% attack, would likely destroy Dogecoin, so its developers had to do something. Their solution was to adopt something called auxiliary proof of work, a way to merge Dogecoin mining with other similar networks. So to simply put, aux POW enables miners to work on multiple coins at the same time and reuse the same work. Back then, it was somewhat of a controversial solution. Some users were concerned that it would put the future of Doge at mercy of bigger miners. While the change likely saved Dogecoin, the concern was still valid. 95% of Dogecoin mining today is done by Litecoin miners. This dependency carries some nasty security implications when Doge has a market cap of nearly 10 billion. So this was from February. Doge is now at $50 billion, which is crazy to think about. So essentially, you can think of aux POW as a double-edged sword. While it protects both Litecoin and Doge with the same work, it also makes it easier and considerably cheaper for an attacker to simultaneously take over both networks. So it's very unlikely that this would happen, but in a hypothetical situation, it is definitely possible. So here's what could happen. You could buy large quantities of Doge and Litecoin, deposit it all in a major exchange, trade Doge and Litecoin for Bitcoin, withdraw Bitcoin. Issue 51% attack on Litecoin that makes it so that deposit never happened in either chain. It's unfortunate, but Doge and Litecoin will have to endure a dangerous period until more miners join in and make this attack harder to pull off. So essentially, I suggest you go look into this yourself, but it is a very dangerous position to be in. Like I said, from a hype standpoint and from a technical basis of Dogecoin, it makes it a bad decision. It is completely hype driven. I've seen tons of videos popping up on YouTube lately of people screaming at the cameras, talking about Dogecoin, looking at these green candles, it's going up, it's going crazy. Look at this, it's exactly as I predicted. Sure, that is going to be very short-lived. You can't survive off of that, and many people are going to get burnt, and I'm sorry that is going to possibly eventually happen. Of course, I could be completely wrong, but this is just my opinion and my view, and I just want you guys to be safe because there are safer investments out there. Then this basically accentuates what I've just been saying. If we look at Suzu, if it's your first cycle, you might think that your dumbest friends entering crypto is a top signal. So this is generally an accepted idea that when mainstream media starts coming in and Paris Hilton and celebrities and so on start talking about cryptocurrency, that this is the top and it's just downhill from here. While this is not the case at all, actually, OGs know that your dumbest friends will outperform you by 10x. Then they'll buy your coins while you buy theirs because they'll research while you FOMO and then win again. So this is how the cycle works, right? If you end up falling into that cycle of that hype trap, you'll end up purchasing Dogecoin. Even in the position that I'm in, I've been here for a while, it does stir up some FOMO inside of me. I would want to own some Dogecoin just because of the hype behind it, right? But if I think about it logically, it is a horrible thing to do. Now, what ends up happening is those that I get messages daily from friends of mine who have just entered crypto, and they're like, dude, have you seen Dogecoin? Have you seen what's happening? I bought this, I'm up 5x, I'm up 10x, and I've made thousands of dollars. Sure, that's great. And while that can stir up a lot of FOMO in many people and cause them to FOMO in, it will be the last ones to get in that are the ones that get burnt. So you have to understand the flow of money in cryptocurrency, how it flows from Bitcoin to large caps, to medium caps, to small caps, and so on. Even in this cycle, it's a little bit all over the place and that money is flowing around. It's best to sit still and just wait until your coins pump, because you will be in a position like this where you get wrecked because you continually FOMO in and out of different coins. Now, let's go back to altcoins. Where do I see it going? As I said, there is a potential very large alt season around the corner, and that is accentuated by the chart of Bitcoin dominance. Now, you guys would have remembered from the previous video that we were at the 56% level, and I said that if we continue dropping, we will see alts pump like crazy. Now, if we break down to the 52% level, that is when we will have what we would consider a massive alt season. Now, right now, most of this Bitcoin dominance, the money that is in Bitcoin has been flowing potentially only to Dogecoin because it's been sucking the life out of the market. As I've said, if we go over to a CoinGecko, it's likely that Dogecoin is probably the highest percentage gainer right now. Past 7 days, 550% compared to that everything is in the single or double digits. Dogecoin is in the multiple triple digits in percentage gain over the past 7 days, which shows you that the hype is surrounding Dogecoin. Now, when the profits or the people in Dogecoin start taking their profits, this is going to flow directly back into the other altcoins because we do see the Bitcoin dominance continue to drop. And once those profits start flowing out of Dogecoin, we're going to see a massive alt season. We can also look at Ethereum. From our previous video, you guys will remember that I believed we would go up to the next fib level, which we did, and we got rejected at, and we've come back down, which is a very, very good sign. Actually, we did need a bit of a cool off. We've had a good run for Ethereum, especially considering the upgrade, and we do have a better upgrade coming with the London upgrade in July, likely. And once that happens, we'll understand, or you'll see the true power of Ethereum, which I'll cover in a second in the video as well. And I'm apologizing for this super bright light that is reflecting from building across the street. Now, ARK Invest is one of the major funds in the world, headed by Cathie Wood. They also purchased Coinbase shares, which you guys might have known that the Coinbase IPO happened recently. And while this is a great overarching thing for cryptocurrency in general, I don't believe that this is one of the most important steps or one of the most important events in cryptocurrency overall. And the reason for this is that this is going back towards the centralized world. It's going back towards traditional finance, right? We have this world of decentralization. We have cryptocurrency, but all Coinbase is a fiat on-ramp basically for cryptocurrency. So it's getting people from the traditional financial world or from the real world into cryptocurrency. But that doesn't necessarily mean that they should be this $100 billion valued company. So currently they're 60, 70, $80 billion valuation based on the fact that they have made $1.8 billion in revenue, right? So this but business model that they have will likely continue to grow, and they're likely to make $7-8 billion this year based off of the amount of trade that is going on in the market. And a lot of this is based on Bitcoin's performance and the amount of people coming into cryptocurrency. Now, while I do believe that Coinbase's valuation will track against Bitcoin during this bull market, I am personally not buying any of this because I don't need any additional exposure to cryptocurrency. If you're in cryptocurrency right now, if you own Bitcoin, Ethereum, or pretty much any altcoin, you don't need additional exposure and risk by exposing yourself to something like Coinbase. Coinbase was a first mover. They do have first movers advantage, which I do believe will help it grow and really increase its market cap. But there will be other players that come in like Kraken, which I expect to have the next IPO. But Coinbase does have the advantage, of course, of being a first mover, but it doesn't necessarily mean that it's the best. As many of you know, there's a ton of issues with Coinbase, horrible customer support, issues with them going down, servers crashing. There's a lot of this going around Coinbase, but from a general, again, mass adoption standpoint, it does help get cryptocurrency in the eyes of many millions of people, because they see that, oh wow, the crypto world is being taken seriously. These traditional or these crypto first companies are now getting listed on traditional stock exchanges. This is a great move, and meaning that crypto is getting taken seriously. So I do believe it's a good move overall, but I personally wouldn't purchase crypto or Coinbase stock. Now, Cathie Wood, obviously they added additional $110 million worth of Coinbase shares to add into ETFs, which from their standpoint is, it would be a good view because they are diversifying their risk and their investment. But ARK Investors offered the bullish prediction that Bitcoin's future total market capitalization will one day comfortably eclipse that of gold and exceed $10 trillion. Now, many of you know that this is very possible in this bull run, and it's very likely that we could reach $9 or $10 trillion for just the market cap of Bitcoin in this bull run. And I believe if that does happen, we will see huge news like this continually come out that cryptocurrency is finally replacing traditional financial systems and institutions. And that is essentially what Coinbase is trying to be, right? They're trying to be the crypto bank. They're not trying to be this crypto first industry. If that were the case, they would be purchasing Bitcoin directly. But ARK Invest is investing in Coinbase because they believe that it would be a crypto bank, and they're looking to compete with banks, not necessarily compete with other cryptocurrencies, or else Coinbase would have just simply created their own crypto. Now, advancing on that, I just want to explain the difference between centralized exchanges and decentralized exchanges and show you that the future is decentralization. Even though Coinbase has gone public, like I said, it's not the most important thing that has happened in the bull run so far. So the top exchange volumes on DEXs is over $9.5 billion in the 24-hour volume, whereas on centralized exchanges, Coinbase Pro only has about $4.8 billion in 24 hours trading volume. So DEXs are still overtaking, overall, even though they're all of the DEXs combined, are still overtaking the volume of Coinbase. Well, if we compile all of the volume of centralized exchanges, that obviously is more than decentralized exchanges right now, we can see that on Uniswap alone, $1.4 billion, on PancakeSwap, $1.7 billion. That is a lot of volume in decentralized exchanges compared to a single Coinbase company going public that only has $4.8 billion in daily volume. So there's a lot of hype around this because it is attracting mainstream news, but it doesn't necessarily mean it's the most important thing to happen to cryptocurrency this year. And I don't believe it's even one of the even least important things. But with that being said, we can see that there's a lot of interest on Binance Chain now, which I just want to go back to the decentralized exchanges. Binance Chain or PancakeSwap is getting more volume daily than Uniswap, and that is because the fees are so much lower. So this just shows that there's a lot of demand for cheap fees because there's a lot of retail investment. Institutions and people who have a lot of money don't really care about transaction fees, but the retail investor, the everyday investor, really does care about those fees. And we see that this interest in BSC and Binance Smart Chain is not slowing down. So perhaps I'll discuss that in depth in another video. But Binance is doing something very, very smart. They're not looking to compete. This is what I always say on this channel, that those looking to collaborate rather than compete are the ones that will succeed in this market. And that is exactly the approach that Binance and Binance Smart Chain is taking. So CZ of Binance says that as an exchange, we won't miss out on trading volume, also root for coin. So they listed the stock token for Coinbase on Binance, and they're doing very similar things where they're listing other exchange tokens on their exchange because they're accepting this collaborative approach, right? So they say some exchanges resist listing BNB as they think it may help Binance. It's their loss. They miss out on the third market cap coin and its ecosystem. And this is very, very true, right? So there's going to be this network of interoperability, of collaboration that's going to come in the future. It's not going to be one winner overall. And this is definitely accentuated by this. Even though Binance Smart Chain has 4 times the transaction volume of Ethereum right now, there's a lot of news surrounding Ethereum and why I still do believe in Ethereum and still do love Ethereum. And I'm somewhat of an Ethereum maxi. But you guys know I don't believe in chain maximalism, but I'd still do love Ethereum. But before we get into that, I just want to highlight one BSC project that I am an early investor in. I was a pre-sale investor in this, and they have just launched their whitelisting event on polls. So the first major NFT marketplace on BSC. Just as I said, the most important thing with fees is that the average investor is not willing to pay these super expensive fees, especially with minting NFTs, right? One of the major problems with NFTs is that you don't want to pay $50, $100, or $150 to mint an NFT, then to only sell it for $50, $60, or $100. Especially for the average creator or the average artist, they aren't selling these highly priced, massively overrated NFTs for thousands and millions of dollars. They're selling smaller NFTs, and they want these NFTs to either be linked to real world assets or to represent something. It's not worth paying these astronomical fees for these NFTs. So when you have things like this, an NFT marketplace launching on BSC, I think this is very important and has a lot of room to grow, because most people will flock to that, at least in the meantime, before Ethereum really starts making a comeback. People are going to flock where the fees are the least. And we've noticed that, and we've seen that with the trading volume accelerate like crazy on Binance Smart Chain and BNB. The growth of BNB as well, it just accentuates this too. But getting back to Ethereum, Binance burns part of its BNB supply every quarter. I'm not sure on the exact mechanics, but they burn close to $600 million. This got me thinking about Ethereum EIP 1559. So you guys know what's going to happen with the upgrade in Ethereum coming later this year. We will have fee burns. We will have a deflationary Ethereum, meaning that the value of Ethereum will go up. And we've seen how this happens when a coin is majorly deflationary and the supply gets burnt. We see this major volume, this major rise in the token price, right? So BNB burn equals to $6.67 million burn per day. It's projected that after the merge, Ethereum will burn 12 to 15,000 ETH per day. At today's prices of $2,400, that means ETH will burn between $28.8 and $36 million per day. That's between $864 million and $1 billion per month burned. And that's with today's price of 2,400 Ethereum. Now, Ethereum is obviously going to continue rising in value, as we've seen with the previous upgrade and with this hype around Coinbase and so on, that Ethereum's value is going to continue going up, at least for the rest of this year. And if that's the case, we're going to see a ton being burnt, and the price of Ethereum is then going to skyrocket like crazy. So 33 to 66% more than the money burned by Binance, burned in 3 months, in 1 month on Ethereum. If rollups usher in another DeFi summer and network activity takes off, we could look at even more fees because of the induced demand despite having lower transaction fees. We also need to take into account that stakers can't withdraw because this merge doesn't allow that yet, which means that the issuance after proof of work is shut off doesn't hit the markets. Even if it would, proof of stake issuance is 95 less than proof of work issuance was. Conclusion, if BNB burn makes you out, the daily ETH burn will melt your effing face off. Ethereum is ultra sound money. So essentially what they're saying here is that Ethereum still has a ton of room to grow. I'm very, very bullish on Ethereum, and you can understand exactly why. There's a lot of hype around Ethereum. Ethereum still has the network effect. It has the DeFi built on it. It has tons of projects built on it. It's just about time. Ethereum's been here for years. A few months is not going to slow it down or destroy it at all. Yes, some of that volume may be taken to Binance Smart Chain and layer 2 solutions and so on, but this is all, in my view at least, a very temporary solution before Ethereum really starts taking off and the volume and hype starts going back to Ethereum. Overall, I think we're in store for a major alt season and perhaps another DeFi summer, as you've seen here. With a lot of the volume, a lot of retail investment, people are looking to do stuff with their money. We've got now a lot of people coming into cryptocurrency, as more people come into crypto and abandon traditional financial systems and institutions and banks, they're going to be throwing their money into crypto, and then they're encouraged to sit and hodl. but they also want to make that money work for them. So that's why I believe we'll start seeing DeFi make a second comeback when people start wanting to do things with the money that they've invested in cryptocurrency. But that's all I have for you guys today. I hope you liked the video. If you did, please don't forget to hit the subscribe button, turn on all bell notifications, hit the like button if you haven't yet, and maybe leave a comment down below about something that you liked in the video. As always, I shall see you in the next video. Cheers.